And good evening, good afternoon, ladies and gentlemen. Welcome to Elite Traders University presentation of the Pip and Run Market Outlook. My name is Greg McLeod, and I'm a trader and the founder of the Elite Traders University. And I'm also the creator and inventor of the Pip and Run Forex scalping system. And it's good to be with you here on this wonderful Sunday, this Super Sunday. And we're going to dive into the markets and lay out a game plan that can help you trade better and find great opportunities for this week beginning the February 10th, 2019. So let's get right to it. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And just for those of you who are just watching this for the very first time, I want to introduce myself. My name is Greg McLeod, and I am a founder and CEO of the Elite Traders University, and I've traded for 22 years. I'm a trader mentor, trader coach. I'm the foremost authority on short-term day trading and scalping, and I've traded everything from futures, stocks, Forex, and crypto. Spent 8 years as a currency analyst at one of the largest Forex broker dealers in the world, FXCM, and I spent 16 years as an instructor in public education. And I worked at a prop trading desk and at Bank of America. I'm a published author, and I have articles on Yahoo Finance, Daily FX, and FX Street. And I've trained thousands of traders around the world in my proprietary Pip and Run system. And I also developed the Trend Spider indicator as well. So I'm uniquely qualified to teach and train. Every quarter or so, I take a handful of students and I help them to become professional traders using my approach and within our trading school. But what we're going to do is what we're going to talk about. Our objective for today is to create a weekly Forex trading game plan and also to develop a Forex scalping map. Okay, because if you fail to plan, you plan to fail. So it's important to have a game plan going into this week. And we're going to identify the best pairs to trade for the week based on our analysis. Okay, so the next 60 minutes, this is for you if you are a trader and you trade Forex and you don't know what to do or what to trade when it comes Sunday, actually in the evening when the markets start to open up on the Monday in other parts of the world. Okay, so we're going to look at the instruments we're going to look at today. We're going to look at the US dollar index, the euro dollar, the pound dollar known as cable, Aussie dollar, dollar yen, dollar CAD, gold, silver, oil, the S&P 500, and economic news releases, as well as world news headlines that can impact the market. So when we get a look at the majors and gold and silver, all these markets are interdependent. Knowing where these prices are in relation to key levels of bank support and resistance, significant levels of support and resistance, we have a better idea of where to enter and exit trades. Okay, so let's get right to the charts. Okay, ladies and gentlemen, before we get started, I want to direct your attention. We're going to move up to my Forex heat map. And my Forex heat map is an arrangement of currency pairs by percentage change, and it's a powerful tool, a whole suite of tools that can help you analyze the market. And you can go to myforexheatmap.com and you get a 7-day trial for $1. You can try it out and see if it benefits your trading like it does mine. So I'm going to click members login. I'm already a member, and it's going to spin around a little bit. And then there is a number of things here that have been added. We have an economic calendar, national holidays, and Gung Hei Fat Choi. We have it's Chinese New Year, Lunar New Year. Happy New Year to all you in the Far East. We have central bank rates, charts, and financial news. So let's go ahead and go to our economic calendar. We'll locate it on my Forex heat map. Okay, and then we're going to go ahead and look for next week. And here we go. We have a number of things here. My Forex heat map. We're looking at some Chinese data. It's low impact data. They have the low and the high impact data. So we can filter this out. You can filter this just to look at the medium and the high. And that way we don't get bogged down trying to figure out every single announcement, right? Okay, so they have consumer price index year on year of Switzerland. Don't necessarily trade the Swiss franc. They heavily manipulate their currency. So let's go ahead and look at the manufacturing production month on month. That comes out at 430. That is a medium impact item, and the previous number was negative 3.0 or 0.30%. No forecast is given, but usually if they're on the negative side and they beat if the actual comes out more than the previous number, since we don't have a forecast, that could send the pound higher. But we will know that whatever the number is, the pound will be in play at 4:30 on this Monday, February 11th. Okay, so we want to take a look at note of the support and resistance levels and see how the market is behaving, how the pound market, the pound CAD, pound yen are behaving in that area. We're going to take a look at pound dollar in just a minute. But we have ZEW economic sentiment survey, okay, and that is coming out of the Eurozone. Medium-term impact, and no forecast given, negative 20.90. That's pretty bad sentiment. Usually, economic announcements are coming either sentiment, employment, sales, and growth. So and central bank announcements, interest rates, right? So those are the major types of announcements that move the market. Okay. So lots of ZEW surveys that come out of the different countries in the Eurozone. And so that means the Euro is going to be heavily in play, because you see there's a German flag there, and you'll have sometimes ZEW coming out of Italy or France as well, but they're all part of the Eurozone, basically the United States of Europe. Okay. So now this is a high impact one of Germany, supposed to be negative 15. Again, no forecast is given. We don't get our 8:30 news announcement on Monday. U.S. dollar unit labor cost is medium. Expected to come in at 1.70%, a lot higher than 0.9%. The dollar has been on a rally. It's been on a very strong tear against the other currencies. If that rally continues, then we could see, a good number would be good for the dollar, and maybe the euro is kind of like a negative trend, so it could continue to fall. However, this number disappoints. We could see the euro maybe get a little a breather from all the selling that's been going on. Okay. Then we have credit card sales. Okay, that's a retail sales, and that's medium. No forecast is given. Negative 2.30. A lot of negative data, with all the trade wars and uncertainty in the markets and things like that. That has been a drag. People don't want to spend. They hold their money a little tighter to their chest when they're not sure about what's going on. Okay, so Kiwi could again, we're pairing everything against the dollar. The Kiwi dollar could sink on this number. It's already coming in negative. Also, we have some Aussie data coming out as well, and it's medium term, and they're all looking negative. Now, if they come in less negative, maybe negative 3.5 instead of negative 4.5, that would be bullish for the Aussie dollar, because why? It's probably selling off based on this data. Remember, a lot of the big boys and girls have access to these releases a lot more in advance than we do. Okay, so we'll see what's going on there. And also foreign direct investment in China. Now, we said, well, Greg, we don't trade the Chinese renminbi or the yuan, as it's also called. Why should we care? But China's biggest trading partner for Australia and New Zealand. If China's doing well, Aussie and Kiwi rally as well. China catches the cold, these two will catch the flu. So we can trade China. We can trade China through the Australian dollar, New Zealand dollar as a proxy. Okay. Then on Tuesday we have gross industrial production, and again that's negative 2. Gross domestic product, or GDP, that's usually a big number, and it's supposed to be a little positive, 0.2. Okay, so 4:30 again, the pound is going to be in play. So if you're trading the London Open, the best currency to trade is probably the pound. You might not want to trade the news announcement itself, because that could be kind of risky. Wait an hour or so afterwards, or 30 minutes after all the chop, because the smart money is going to be out of the market at the announcement, and they'll enter in, and liquidity will come back into the market after the announcement is made. Because this is a risk event. Okay, and a lot of traders don't want to get ahead of that and get chopped up. Now, amateurs do, and there may be some people with a winning system that will win sometimes, But for the most part, the professionals get out of the news and get in afterwards. Okay. We have the a central bank announcement. This is one of those interest rate announcements I was telling you about. Very big, and the interest rate, it was 1.75%. There's no forecast. I guess they're going to keep rates unchanged at 1.75, pretty high. But the Australia central bank, or the RBA, wanted to actually cut, possibly cutting rates, and that caused the Aussie dollar to really sink. Okay, so we'll see what their rate statement is. If they talk about, if they're dovish, meaning that they're saying, hey, you know what, I don't think we're going to hike anymore. I think we're going to cut. I think we're too high. We don't want to be the only one on the block with everybody with weaker growth in our country, with all these negative economic indicators. We don't want to have our interest rates high. So guess what? People will run from the New Zealand dollar and they'll run to the US dollar. The US dollar is a high yielder, 2.25%. Hey, you know, go USA. So we're becoming a high yield currency. So they're going to have a monetary policy statement too. Usually on this announcement too, the trading desks are closed. So even though the Forex market never closes, you can't trade it because your desk will not have it won't be able to have get an order in. Okay, so you get that press conference. Then they have Westpac consumer confidence coming out, negative 4.7. Again, that's a sentiment. It looks bearish too for the Australian dollar. Then you have some data, a lot of data out of China. Remember, it is Chinese New Year, and they are having this data coming out. So it'll be very interesting to see how it affects the market, considering that, you know, basically the country is business-wise is shut down for like 2 weeks. Okay, so it's bigger than Christmas. So let's skip on down. Lots of data for cable, for pound. Okay, not just cable, but pound dollar, pound CAD, pound yen, pound Swiss, right? It's just you're getting it pounded. Lots of data. Retail prices 0.4, that's positive. Retail prices 2.7, that's positive too. PPI core output, positive. So it's like, geez, a lot of positive data. Isn't Brexit supposed to make things worse? Interesting. So we might get a pop, you know, if these numbers are positive and the actuals are positive too, then we could see a rally in the pound. However, if they disappoint, we could see the pound sink. Okay, so Wednesday is going to be like Super Wednesday, February 13th. Mark it on your calendar. The pound is going to be in full effect, in full play. We have industrial production in the Eurozone, and again, we got negative 1.7% there. Then good old USA at 8:30 on Wednesday. We're going to have lots of US data. We're going to have the consumer price index, and that's at 260. We have a consumer price index there, negative 1.0. Now that's kind of interesting that prices, the inflation may be tapering off. Even Janet Yellen said in an article on CNBC, somebody reported that Janet Yellen said that the Fed may cut, you know, because of the weak demand. And you can see if PPI is low, you know, the only reason why you should have a high interest rate is because your PPI, your CPIs are higher. That means there's good demand. But if people are losing their jobs and prices are falling because no one's selling anything, you're getting a buildup of inventory. You're getting stuff like, you know, getting like 65-inch TVs for like $190, and oil is cheap, prices are cheap because no one's really buying anything because they're losing their jobs and they're closing factories. That is not a reason for the Fed to tighten. In fact, the Fed may need to loosen in order to pick things back up again. Okay. And so, you know, maybe the argument that, you know, the government shutdown too was also a drag on the economy. Now, the consumer price index month on month, we have a consumer price index X food and energy. And I don't know who doesn't use food and energy. I use both. You can tell. But, you know, it's 0.2. And we have year on year. It's been going up year on year. Okay. And so we'll see if, now these are going to be very big for the US dollar and the euro. Okay. The euro is the anti-dollar. So if these numbers are negative, expect a rally in the euro. If we see this positive numbers, we see the euro sink and we see the dollar rally. Okay, so and we have we have Japanese gross domestic product, 0.60%, and it's usually negative because they've been negative for the last 20 years. So it doesn't really, no one really pays attention to those numbers anymore, because basically Japan's going to weaken their currency anyway to try to stimulate sales of their goods abroad. Now, consumer expectations, we have consumer inflation expectations 3.5. Okay, and we'll see if the expectation of inflation is down, then the Aussie dollar could continue to fall. Okay, and then we have lots of European data coming out. GDP, big. That used to be the granddaddy of them all. I mean, NFP, GDP, those are the two biggies. But a lot of the data comes out in different leading indicators and things. And GDP is like a backward-looking indicator, so it may be, people may pay attention to it, and they may not. It may be priced in. If these numbers are bad, expect the euro to maybe touch that 112, maybe 111 zone, and we've been stuck in that range for a while. Okay, but then we have producer price index, retail sales, ex autos, sales. Sales is the consumer is a big driver of not just the U.S. economy, but world economies. U.S. consumes a big consumer of world goods. So if U.S. customers are buying, that's going to help the Eurozone. It's going to help Japan. It's going to help New Zealand, Australia, because, U.S. imports more than they export. In fact, we have a trade imbalance. Okay. We have a trade deficit because we import more than we export. But good news for other countries is that if this is a good number, then it's going to be good for the world economies. Okay. So we're going to watch U.S. retail sales come out at 10 o'clock. 8:30 and 10 o'clock are the two times when we have U.S. news. And so if you're in a market or in a U.S. dollar trade, you might want to be out of it. You want to wait till after 10 o'clock to re-enter it, because they'll go one direction and then they'll fade another way, right? Let's keep on going. We got just a little bit of Friday. We have a lot of Chinese data too, year on year. And again, we could trade if it's good positive numbers. It could affect the Australian dollar, but if they suck, and that's a technical term, then we can see the Aussie dollar, New Zealand dollar tank. Okay, so if you look at Chinese data, you say, well, where's the Chinese currency? Well, don't worry about it. There is it, but the spreads are wide and the pips are small and the margin's high. Just trade the Aussie dollar. Okay. Friday, we have industrial production month on month of the U.S. at 0.3%, and Michigan consumer sentiment 91.20. That's the previous number. We could get a pretty good, if sentiment is good, expect we might see the dollar actually sink, because it's actually good for the global economy too if U.S. consumers feel good about buying. Okay. So that's the economic calendar, and hopefully the news that could use to confuse, maybe you're a little less confused now. Let me know in the chat box that you understand what's going on. We got an idea. You feel a little better about what's about that. You really should look at the news. I know your guys big charts, big technical people. But I tell you what, if you've ever been into a trade and all of a sudden something happens in 8:30 and you don't know why, and your trade went from profit to to toilet. It's all because you probably weren't looking at the right stuff, right? So we're going to look at the national holiday data here. Again, it's Chinese New Year for a long time. Canada's going to have some holidays too. Japan, National Founders Day on the 11th too. And we have President's Day on the 18th. Okay, so during times of holidays, sometimes you'll see illiquid moves, big long wicks, and all kinds of price action, because if those traders are on vacation, who's going to take the other side of your order? Who's going to if you want a stop to take you out, who's going to take that if they're not there? So you get slipped, and that's what that is. And then you call your broker and say, hey, I had a stop and they didn't honor it. You guys are crooks. So I was like, yeah, they're crooks, all right. But really, there was no one there because everyone was on vacation. You should be too. And usually the worker people, the average Joe, gets off when the market is illiquid because everyone else is in the Hamptons or the French Riviera kicking back and you're trying to trade, right? That happened to me as a teacher. I would have, you work in the fall, then you have the winter break, but guess what? The market's on the break too, right? And so you got this liquid choppy market, you get chopped up, you start trading because you have all this time off, you have all this vacation time to trade, but then the trading sucks. Then you go back to work, and when you're looking at your phone, you go, oh man, look at these great moves, but you can't trade them because you're at work, right? That's how it works, because when you're working, these guys are also working on the desk. And when you're off, they're off too, but they're in Hawaii or the French Riviera or the Hamptons. So if you experienced that, let me know in the chat box. The time when you're off, trading sucks, but the time when you're working, trading is great, but you can't focus on trading because you got to work, right? But sign up for my coaching class and we'll talk. All right. Central bank rates. Okay, let's take a look at that. Kind of important to take a look at that. But I already kind of told you that we are the high yielder. This is the United States, 2.5%. We're a high yielding currency, guys. Unless Russian Federation 7.75, but would you really want to have your money too long in the ruble? Probably not. That's why they can't do those those currency swaps to try to get the dollar out, because the other currencies are way too volatile. Okay, so let's go ahead and look at the charts, and we'll pull up. And you can, and right here in my Forex heat map, again, you can get that for trial for $1. 7 days, a lot of fun for $1. Okay. And so you can stay on the same page here. Oh, let go. All right. So let's look at a daily chart now. And then I'm going to look at, now I'm going to give you a little trick here that I do to find currency strength. I'm going to put a moving average. And guys know I was a big 200 simple moving average fan. I still am for the most part. But Alexander Elder in his book, my favorite book of all time, you really should buy it. I love Alexander Elder. It's called The Complete Trading for a Living by Alexander Elder. This is like the nuclear edition with the silk the silk bookmark there, right? It has the workbooks and the textbook together. And in that book, and on page, I think I have the page marked too. Just so if you have that book, look on page 232, and he talks about how we can use the exponential moving average, the 13-period moving average, right? And I'm going to change that to 13, right? Because it's like 2 weeks. If you look at the 200 moving average, it's great, or the exponential moving average over your picks are. However, what's going to happen? It's basically the average price for the entire year, because there's 200 and some odd trading days, right? So this was a little bit more responsive, and basically what Alexander Elder says is the angle of the moving average in relation to the daily price will give us the current trend direction that's tradable. Okay, because you all day long can say, wow, this is a downtrend. But the moment it starts closing up above the 13 moving average, and the 13 moving average starts moving up, that means the trend is up. Okay, and we probably make more money trading in the direction above the 13 than trying to short it. In this case here, we close below the 13 moving average on February 5th, and so this has been trending down, right? So we've got some support. We can put some daily support, classic support lines, and whole number round number 1300. We got bankers support right in that same area. Lots of support there, but we're a long way from that support. So we could probably drop down to that area. Okay. Now the euro is the anti-dollar. So I'm bearish for the euro down to this 112 or so, maybe 75 or so. And even I'm actually looking for a retest of this untouched low 112.15. That's what I'm looking for price to get down there. And so any retrace up in price, I would drop down. Let's say, well, Greg, the daily is a long way. A lot of stuff can happen, right? But you can see this baby's been a sled ride down, baby, like wee, right? So sometimes this is way oversold, and we might get some type of a retrace up toward that, maybe up to these highs here, 113.32 or so, and I want to be able to short this down to this target. So that's my, that's where I would look to short any rally. I would like to, like here, this is a rally to short, here a rally to short. So we wait for the layup or the pop up, wait for it to pop up and smack it. Again, more technical terms. So ideally, if you short here, he'll like, hey, it's a downtrend, I'm shorting. He's like, nah, eh. Market makers are going to say, all these guys are getting short, let's take them up, stop them out, and then when everyone gets long, they take them back. That's called market manipulation. And I've got a video on market manipulation, Bitly impact money. I'll put that up there for you to, let's see if I can find it for you. Copy, yeah. Maybe put some text there. And I would put in the chat box. If you want to watch my training here, I'll just put this in there, make it red, and so you can see it, make it bold. There you go. And make it even bigger. How about 40? Yeah. All right. So there it is. Bitly make impact money. Okay. That's where my free training is. So if you want to watch it, talks about banks supporting the resistance levels and the principles of pip and run, if you are so inclined to watch. Also, there is a link there if you want a free coaching session with me, and we can talk about your trading and outline a strategy to help you get better at your trading. All right. So that's the euro. And I'm looking for a pop and a drop. Usually Monday, manic Mondays, you'll get your rally, but don't get married to the rally. Look for a drop. Okay. So we look at the euro, but let's look at the Dixie. I always look at the U.S. dollar index, which is an arrangement. Oh, really? Okay. How about this one? U.S. dollar index. There is the U.S. dollar index, the Dow Jones, and you can see that this is a basket, a currency basket as well, and we're making new highs, right? Higher, making these highs. But look, we've probably hit a Fibonacci zone of resistance. Resistance is futile. No, there we go. Okay, Borg trading. Hey, that sounds like right. So there we go. We've got major. We came here at almost the 1200 or 12,000 area, and we're probably hitting a 50% retracement. So we might pull back down in the U.S. dollar index. That would coincide to a rally in our non-dollar pairs. The ones opposite, like pound dollar, euro dollar, Kiwi dollar. We may see some rally as this pulls back to some support. If we pull down to some support, we can see this pull back down on Monday, but on Tuesday, it starts to rally. See, what happens, what you guys do, and I've done it too, is you're so eager to trade on a Sunday or a Monday, and you'll get in a trade, yeah, it's up, and then you'll buy it, and then it'll drop and stop you out, right? And then you're just like bummed. And then it takes off and goes up, right? Or what happens is you'll short it and you'll make money, and then it'll turn around and go up and you'll get stopped out and you're bummed there too. You have to understand that there's usually a cycle where Mondays reverse, Tuesdays reverse, you have turnaround Tuesday reverses Manic Monday, right? And you go, what? And they got the WTF Wednesday, right? And then Thursday you make all this money, but you were in the hole because you got jerked around on Monday and Tuesday. So really, you want to see where the real market comes in after Tuesday, because a lot of traders take 3 days off. They take off Friday, they take off Saturday and Sunday, they take off Monday. They got the B team on there on Tuesday or Monday, Monday, Sunday. It's like, don't touch anything, keep it in a certain range, and then the real market comes in, and then they take it to where it's supposed to go, right? But in this case, we might see, this pullback, but a continuation of the trend, because the trend here is, we can see it is up, right? So if you're just trading on your smartphone, you're probably going to miss all that, right? So let's keep going. Okay, so we got US dollars, so I'm looking for maybe short-term pullback, but again, we're looking for an expansion. Euro, I'm looking for saying the opposite. I'm looking for EUR USD to actually again, if you get we look to drop down to the 1294, 112.94, then maybe down to 112.15 to this level of support. Okay. Now let's keep going. Let's go through these pairs: AUD, USD, and let's see. I'll go through my checklist, make sure I am following my agenda. Oh, pound dollar. Yeah, GBP USD. GBP USD. Lots of pound data coming up. Okay. And we've got this daily chart. We're clearly below the 13-period moving average, so we expect prices to continue down. But before we go down, we have to load the boat with some fresh meat. Fresh meat are the suckers. They'll probably, I'm sorry to call you guys suckers, but they'll go, yeah! And it'll go up for a little bit, and they'll float you for a bit, maybe 35, 40, 50, 60 pips, right? But then they'll drop you for like 300, right? So if you're going to play the counter trend rally on this, keep your stops tight, and only go for short gain, because we are bearish, and looks like we're going to roll over. Okay, but this hammer wick is probably something that could hold for a little bit. So you could probably trade it north for Monday, Tuesday, or Sunday, Monday. But we might top out somewhere in that 130.50 to 130.100 area and look for a precipitous drop. Yeah. And continuation of the overall downtrend that we see back here, right? And we could even see a retest of this old low, 123.83. May not be this week, but might get pretty close down there. Okay. All right, let's keep it going here. AUD USD. Okay. Remember, we have and also remember, check your data, check your news and your announcements, and you can see that this long wick, and we formed like an A, B, C, and this is probably our wave 1 down. And we could probably see a rally from this area. Okay, we'll probably rally a little bit. Again, looking for the pop-up rally and to short it. Maybe use some oscillator like RSI or stochastics to look when this thing gets overbought to sell. Because right now it's probably oversold. We have support right there. We could scalp it up, but be careful, guys. The scalp up may not last very long, but there will be probably more pips to the downside. Why? Because the trend is down. We're below the 13-period moving average on the daily chart. We can drop down to a 1 hour, and you can see that the bears are probably really tired, and they're probably going to take a break. This looks like some type of a rounding bottom here, and we can see a little bit of a rebound. We could come back and even come up in the 72.32 area. But remember, I'm looking for a rally up somewhere in here, and I'm looking for a drop. And we can even be a little bit more precise. And if you would like, take that swing and take a fib. And, whoa, look what I just drew, 50% retracement. I just eyeballed it, right? I've been doing it for 22 years. I mean, it's like, even a blind squirrel will find a nut once in a while, right? All right, so 618, 72.05. I'd love to short it right there. That's like the 618. That's usually the magic spot where all the reversals occur. They may occur a little bit shorter, maybe here at the 50% retracement, but there. A lot of people don't understand that you got to look in two different dimensions. You got to look at the long term and the short term. Short term, I'm bullish, right? Longer term or medium term, I'm talking like my long term is like 2 days. Okay. You're like, well, what's your 4-year outlook? I'm like, dude, I don't have an outlook farther than 48 hours. That's my long term outlook, right? Anything longer is you get into really random stuff. Okay. So Aussie dollar, I'm looking for a rally from these lows. Whole number, round number, the 0 zeros are holding a double bottom. We might even race up to 7,300, right? But we're still in a, you said it, downtrend, right? Nope, it didn't go on cue. You know why? Because I'm on a shorter time frame chart, and I'll have to back it out really far to find. If you're just looking at your phone, you'll see this. Whoa, look, this looks bullish. It is, but flash the yellow light. You know, this thing is going to turn red and reverse. But it may not do it here. And you'll get comfortable. You go, oh, wow, then you'll start adding more and more positions. And then you think, oh, this is going to go to the moon. And then it drops. The moment you get too comfortable with it, it will bite you. Okay. Dollar yen. Daily chart. Again, it is interesting. We are above the 13-period moving average. But we dropped below it. Couple of bars. Reversal candlestick pattern. We have a morning star pattern, and we're sitting on top of this 13 moving average. It's not angling up. It's kind of flat. It's kind of sideways. Can we like get in there without, hey, I just want you to, let's do this. Okay. Let's elongate. Okay. So we've got this pullback here. We are above the 13-period moving average. And if you went long here, which you shouldn't have because you've got this dragonfly doji here, we would look at this some type of a pennant formation, and it may go down a little bit more in line with the Manic Monday effect, and then the trend kicks in. Like the trend is taking a 3-day holiday too. Trend's like going, well, I want to go up, but nah, I'll wait till Tuesday, and then it comes back, and then boom. Meanwhile, you're thinking, hey, this thing is going to keep going all the way down here. No. I bullish dollar yen. Short term bearish. Longer term, like 2 days, day and a half, this thing screams to 110. 110.40. Okay. Keep it going. Keep it spicy. This thing is going a little bit longer than I expected. I hope you guys are getting something out of it. Are you enjoying it? Are you learning anything? Let me know in the chat box. And here we go. Now, here is the, if you're trading off your phone, you're probably going to see this and go, hey, look, this looks pretty bearish. Lower swing highs and lower swing lows. And this is a uptrend with a pullback. And we have support at the 1.13100, whole number, round number. I mean, you've got a whole bunch of stuff going on right there as far as support. Okay, you got that round number, 000. And in that training that I told you about, you can actually look up, and there you go. Impact money. That is. Make sure you sign up for that free training. Okay, so we've got this lower swing highs and lower swing lows, and so we're looking for this this move higher. Now we might pull back down a little bit. Manic Monday, we could pull down, but I think we go back to the old high, 36.63. Currently at 1.3274. I think we get a little bit of a pullback. So again, I'm short on the dollar pairs. I'm short-term bearish, but long-term, like 2 days long-term, it's like I am bullish. US dollar is on fire. Okay. And it's a high yielding currency, 2.25%. You know, you can get safe yield from a G20 country at 2.25%. Where's your money going? It's a carry trade, guys. It's really simple. Okay. Let's take a look at gold. Given that we have this great US dollar yield, and you can take US dollars and you can buy stuff. You can actually buy bread and cars and houses, lobster, shrimp. But gold, you can't. Gold is nice, it's shiny, but try to buy a loaf of bread with it, kind of hard, right? But it's in an uptrend, and it's above its 13-period moving average, right? And it's bounced. So it's kind of interesting that we have the dollar and gold going up at the same time. Usually that doesn't happen. A lot of weird stuff going on, right? Now this could be corrective. Again, I'm on the make sure I'm on the daily, but we're above that, and the angle of the moving average is up, and so we look for. What do you look for? We look for the old high to be tested, 1326.57. That's as long as this low of support holds at almost the 1300 area, about the 1302 area. That support holds, we expect price to move higher, right? So supply and demand, support and resistance, all different ways of saying the same thing. Buyers and sellers. It came down here. People thought it was cheap. They started to buy. And so we look for a rally in gold. Okay. Silver. Should be the same thing. XAGUSD. We just crossed back above the moving average. It's a little flat. I think gold will probably be a better trade. And we can see big bounce off the moving average. But it's getting into like overhead resistance. So we may come down initially on silver. We may come on down short term, 1573 for support. We look for that support to hold. There's a demand zone right there sitting really pretty, like, look, test me. They used to have the stewardess in those old TV commercials, come fly with me, or come fly me, or something like that. It's like, and people are like, what do you mean by that? It's like, well, my wife wouldn't let me do that. Anyway, okay, there we go. So the demand, this demand zone is like asking to be tested. So we look for a drop there, probably a bounce, and then a retest of the old high. Okay. And probably something like that on gold too. Okay. And let's look at the SPX 500. SPX 500. That's the S&P 500, the CFD. Oh, we can't do that here, right? S&P. S&P 500. How about this one? There we go. S&P 500 daily chart. We're almost done. We're wrapping things up in just a minute. We got one more thing to go. Okay. And so we've got SPX 500, higher swing highs, higher swing lows, and we rallied strongly off that 2320 area. But we were running. There's a lot of lots of overhead supply right in here, and we wonder if this supply is going to, people are going to sell into this because they're like saying, look, I was scared down here. If it ever gets back up in here, dude, I'm out. Get me out of this. Come on, man. Come on, bro. Pop it up so I get my dough. So you got 2,800, and it got right into that zone. I mean, it does touch the bottom. All I did was take the highs of this, the high of the candle, draw it across, and look, we tapped it. All right, but we're above the 13-period moving average, so it's still bullish. It's not bearish, so we get below it, and we could. But let's look at how would this be a scalp. Oh wow, yeah, this thing is a rocket. So we may get a little bit of a pullback. Selling off on Monday is actually a good thing. If the market sells off Monday, the stock market, that's going to be a good thing. Because why? If it sells off, that means that's the fake move, and the real move is going to be to the upside, right? I mean, it doesn't matter. It's not good or bad for me because I'm not directionally agnostic. I'll buy and sell. But a lot of people who trade the S&P are long the S&P because they've got stocks, they've got 401ks, and you can't go. It's very difficult long and short there. Okay, so now last thing we're going to look at is oil. U.S. oil. I hope we can. Yes, we can. Yes, we can. Ho-ho! We can do it all on my Forex heat map. Everything right here. You guys don't have to go anywhere else. $1 gets you access. Okay. Now, oil is bearish. Look, break below the 13-period moving average. But you got a little harami pattern. This is a 2-candle pattern. Big harami means pregnant, right? Or skin on the belly. This is the mommy candle. This little baby on the front, right? This is a bullish candlestick pattern. Why? Why? Because this thing is formed, it's having a baby, and the baby is green. Who's the daddy? Who the daddy? Daddy must be green. And we see, so you got a red candle, have a green baby. Hey, there must be a green daddy somewhere in the family, right? So we see a reversal here, right? And the red candle, like, where did the green baby come from? Okay. Anyway. Because you've got a green candle in the family. Okay. So we're looking for a reversal here. And if it does, we get a rally. Again, if this is, we could see a rally up and then a drop down. And our down, if you're shorting oil, like if you short it right now, you're probably going to get stopped out, right? But if you let it rally up, then we could see a move maybe down into the 50% retracement of $48, $49 a barrel. Okay. And that'll do it. That's it, guys. And remember, if you need, if you have any questions or comments, if you feel free, you can email me. I can put my email address on. Text. There we go. Greg. At elitetradersu.com. elitetradersu.com. Because a lot of people couldn't spell university, so we just sorted it to U for my email address. Okay. So go ahead and you can email me if you have any questions or comments. Tell me what you like. Tell me what you don't like. Tell me, I have a thick skin. Tell me how we can help you out, or even schedule a time with me so we can talk and we can help you if you're trading, okay? This is Greg McLeod signing out. Peace and pips. Happy pippin'. Have a great trading week. Signing out. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!